Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of GameStop, ticker symbol GME. And so, on the day today, Monday, February 5th, GameStop closed at a price of $13.46, going down over 8.5% on the day, taking quite a tumble and breaking this uptrending level of support that I had identified in previous videos. And so I just kind of want to go over what happened, where I see price going, and how I see that this down move could actually be good for the stock moving forward. And so I just wanted to give my perspective on that. And so things that stand out to me, actually, if I do remove all of these drawings, something that stands out to me that I did point out in last week's video was this bearish engulfing candle. So I had pointed that out and said that following that move, we did get a dip to the downside, but then we started going back up. But what I should have recognized was that this candle, this green candle on the day of January 22nd, was attempting to break up to $15 a share, hitting a high on the day of $15.16, but it was rejected. And then following that rejection, getting this bearish engulfing candle, that is the charts telling us that that is the top. The top is in. And while I had thought that this consolidation might be looking good, largely because of this double bottom here, what the chart was telling us was that it was being rejected, that the price was being rejected from $15, and that this consolidation that we were seeing was bearish consolidation, that this is and was a bear flag that has unfortunately broken to the downside. And so if I do throw up the drawings here, just kind of want to point out a couple things. One is this blue line here at 1355. That was a gap that was formed here when we gapped up between November 28th and November 29th. And that was nearly filled on December 7th, off by a penny, filled in the after hours, I believe, but not during market hours. And so now that gap has been filled. So I do think that is good for the stock moving forward. And then where do I see this going from here? It might stand out to you, but I do see this level, the 786 of the Fibonacci, being at a price of $13.28. I do think that the stock will find support there. We can see a little bit of a lip in the volume profile, and I'll actually take a step back and we'll see that it's actually a little bit more substantial than that. And I do also want to point out that in last week's video, I had drawn this Fibonacci retracement from the low over here, I believe on November 27th, but I adjusted that to be at this lower low at $11.83. I just feel like that better encapsulates the move from the bottom here to the top up here. And so the levels that I went over in last week's video, they're just going to be off by a few cents, but they're basically the same. And on that point, I believe that the 1328 here at the 786, I believe that was at a price of $13.32. So not too much of a difference, but considering this chart, considering what we're looking at, I do think that GameStop will be settling out around that 786 before starting to consolidate, hopefully in a bullish manner, before continuing higher. So we will have to wait and see for that. Another thing that I do want to point out, it does look like we're putting in a lower low here with the price, but the RSI, the lows look flat. So that is a weak bullish divergence. I don't think that is necessarily going to hold. If we do see a little bit more of a dip, I do think that the RSI will dip as well, and then we will probably see a lower low in that, and then so there's no divergence between the price and the RSI. Also, I do want to point out that the RSI is 38 right now, so it is above 30, above the oversold territory. So that could suggest that price will continue down, but again, hopefully finding support right around $13.28 before starting to move higher. But as it does move higher, this level, this white uptrend that I have drawn here, that had acted as brief support over here, now that we are below it, that is going to be acting as resistance, especially as time goes on and we start to move up. That level of resistance is going to coincide with all of this volume traded over here that we can see in the volume profile. So this big volume shelf that we see will likely be coinciding with this uptrend. And so that's just really like a convergence of different levels, different signals. And so I do think it is going to be tough to get above, let's see, right around $14.20. But, first what we have to do is reclaim some support right around $13.28 or, just a round whole dollar, $13. So do look for that. Quite possible we will see wicks below this level, but ideally we want to see closes above $13.28 to get a signal that we are respecting that as support. And then on the note of the volume profile, if we do look at it like this with the consolidation over here, it does look like price has entered this area of this kind of notable volume shelf. And that really does extend down to right around $13. It looks like $13.07. So if we start moving down towards 13, if we see closes below 13.07, especially at $13, that could signal that we will be heading lower because there's just less volume traded down here than there is up here where we have this nice consolidation. That will be acting as support, but when we break below it, it could free fall and it could return to right around $12. So something to keep in mind. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.